I have been trading swing levels for 2 years, and in those 2 years, I have traded profitably. And in this video, I will show you exactly how I do this. I will explain what they are, how to spot them, how to use them. I will show you real life examples, and from this you can either create your own strategy or you can learn the strategy I use to trade swing levels profitably. Now, to show I know what I'm talking about in trading swing levels, if we go over to my Discord server, I've been trading profitably for years and years and years, and every time I take a trade, I post it live as it happens. So you can see trades like these, they have these black lines across, and these are the swing levels that I'm talking about. And every single trade I take has these black lines, and those are the swing levels, and I will show you exactly how I trade those in this video. Okay, now first things first, swing levels. What are swing levels? Swing levels are clearly just highs and lows in previous market structure. And what these can indicate, they can indicate a few different things. So first of all, they can indicate things like support and resistance, if that's what you like to trade. Now, this can also be supply and demand, whatever you call it. But swing levels can represent support and resistance. But swing levels can also represent areas of resting liquidity. And this is what I trade. I trade swing levels using areas of resting liquidity. But that does not mean that this video won't be useful to you if you trade support and resistance, because I will show you exactly how to use swing levels and key levels to trade support and resistance, as well as going in depth on areas of resting liquidity, which is what I trade. So let's go into support and resistance and show you how to spot key levels and mark them out using this strategy. So let's say price is consolidating. We are creating lows and highs relatively in an equal area. Now, if we go to our definition, highs and lows in previous market structure. So what we do is we mark out the highs and lows. Now, with support and resistance, I like to mark out highs and lows with a rectangle. And this is pretty much because support and resistance is never perfect on the pip each time. So we can create a high here, but the high won't naturally reject in that exact pixel or pip of the previous high. It always rejects within a certain area. And I will show you a bit of a real life example on the charts later on. So let's go to our rectangle tool, which you can find in this section. And you pretty much just mark out the area of resistance at the top and the area of support along the bottom. Now, this is just using arrows, but let's say we're looking at a real life example on the chart and we have candlesticks. So price came up to an area, created a high, and the high candle looked like this, a bearish candle like so. Then price continued to form market structure and then created a low, and the low candle looks something like this. So that was the low candle. Price then came up to the top, back to this previous area and rejected off. And then we created a consolidation pattern kind of like the one below. How I'd mark these key levels out is on resistance, I'd go from the top of the wick to the top of the body. I'd let go and then I'd just drag out the rectangle to the right. That is how I mark resistance levels. Now, similarly for support levels, I'd grab my rectangle, I'd click on the bottom of the wick, I drag up to the bottom of the body, and I would drag it out. Now, that is how I'd mark out key levels for support and resistance. From resistance, I do the top of the wick to the top of the body, and oppositely for the bottom, the support zone, I do the bottom of the wick to the bottom of the candle. And that is how you mark out key levels for support and resistance. Now, I'm not going to go into the strategy of how you trade them, what you should look for, because I've made videos on that. You can just go through my channel. But this video is clearly showing how you can mark them out. And that is a perfect example. So let's quickly move on to a real life example where I can show you this in real time. Now, this is an example I found on Euro USD, and learning what we've learned, we can then introduce this to our own strategy and real life examples. So here we clearly have consolidation. And how do we mark out support and resistance on consolidation? Well, we'd find a high point like so. And what do? When it's resistance at the top, we go from the top of the wick to the bottom of the candle and we drag it across. The same for support. We'd wait for price to create a low, then we'd get the rectangle from the bottom of the wick to the bottom of the candle body and we drag it across. Now here you see support and resistance will work really well because we've had bounces up here, we have bounces here, bounces down there and there and there, and we'd have a lot of winning trades. But also there isn't just going to be one level for support and resistance, there can also be multiple. Like for example, this is a high and low, and we could draw one here, and that would introduce us more setups. We also have a low down here, which we can draw and introduce more setups as well, because we have rejections there and there. So as you can see, this strategy for marking support and resistance using the wicks and the top of the candles or the bottom if it's the other way around is a really effective way of trading consolidation. So that is done with support and resistance. Let's move on to what I trade, and I trade areas of resting liquidity. So let's say we had market structure like we drew earlier, and it consisted of highs and lows. So price came up, we're kind of going in a range, and we create some choppy price action like so. Where are the key levels going to be, and how do I draw them out? Now, the key levels that I like to draw for liquidity are not going to be a rectangle, but I use something called the horizontal ray. And if you go to my Discord server and you look at one of my screenshots, you always see these small black perfectly horizontal lines, and those are the horizontal ray. And the horizontal ray you can find at the top here, and it is called the horizontal ray like so. And the settings I just use black, and I use 1 pixel thickness because I feel like I have so many on my chart, any more thick and they just really get in the way of price action. So I like to use 1 pixel. So next what I would do is I would look back in time. I would go through all the time frames and do multi-time frame analysis, and at each one of these time frames I'd mark out the key levels, the highs and the lows. And how I do this is I'd very simply go from the top and I just click like that, and look, we have a key level. Same for the bottom, we have a key level here, bottom key level here, a top key level there, and it is that simple. Now again, we're just using lines. If we use candlesticks, okay, like we did before, and let's say we created a high candlestick like this, and then we came down and just created more price action, and then created a low down here, and we had a candlestick like this in the bullish direction, and then we came up again. How I'd mark out the key levels was I'd take my ray, and I wouldn't put it from the body, I do it from the highest point of the entire candle. I do it from the top of the wick. Then, for the bottom, I do it at the bottom of the wick. I would pick the most extreme values as our key levels. Now, why is this? Well, in my experience trading, the liquidity, which is what I trade with, is always above the highest point of the candle or below the lowest point of the candle. So that is how I mark out my key areas. So let's go into real life examples so I can show you. So this is just Euro USD as it's happening. And very simply what I would do and my analysis, I'm not going to go through my full strategy. You can learn that and learn about it in the top right hand corner, how I trade with liquidity, how I trade with these swing levels. I'm not going to go through it, why I do it in depth. I'm just going to show you how I mark out these key levels. So what I do is, let's say I've got a 4-hour time frame and I'd mark out my key levels around where price is going. Well, key levels are previous high and lows. So I'd get my horizontal ray. I can hold shift down, control down on my keyboard, and that locks onto areas of price. So I take my horizontal ray, I'd hold control, and I'd find my lows and highs. If we zoom in here, we clearly have a low at this point, and we have a bunch of low highs at that point. So I get my ray out, I hold control, and I just click. And we do the same thing again. I hold control and we click. Right now, we're actually approaching this area up here, so we could be looking for a liquidity sweep, and I could be looking for an entry, but that is not really for this video. Once again, holding control, at the high up there, we have a low down here, and I'm doing it at the top of the wicks and the bottom of the wicks. And like so, I just repeat this until I have a nice area around where price currently is, because price is currently here. So I want to mark about 3 or 4 below and about 3 or 4 above. And that is how I would do my analysis, searching for key levels. Now, how I trade key levels is very more complicated, and you can learn that through my other videos on how I trade it, especially my video on learning liquidity concepts, which I will leave in the top right hand corner as well. But like I said, in this video, we're just learning how to trade key levels, and that is exactly how I spot them in real time. Now, I hope you guys have learned a lot from my video. Make sure to take notes if you don't really remember things that easily, but these are 2 areas of key levels I like to trade, and exactly how I trade them using a rectangle tool with the wicks and bodies of the candle for support and resistance, and using the horizontal ray tool for the bottom of the wicks and the top of the wicks for trading liquidity concepts. So I hope you guys enjoyed this video. Like and subscribe, and I'll see you guys next time. Peace.